The Saudi government really making a push to try to attract more investment here and doing so on their own terms. But I asked Faris Noujaim. He's well known in the United States. He's executive vice chairman at Bank of America. He's also the man to talk to when it comes to sovereign wealth funds. And I wanted to ask him when Saudi will begin deploying some of its tremendous reserves and whether sovereign wealth funds will be behaving differently in this new economy.
The sovereign wealth funds were the last sort of major providers of that liquidity when the global market liquidity dried up. And clearly on some of their investments in 2008 and 2007, they didn't do so well. We estimate in 2008, at least out of their public equity portfolios, they were down 20 to 25% from the public information that's available. But they've recouped a fair amount of that in 2009. And some of the investments that they've made in late 2008 and early 2009, particularly Qatar and particularly Abu Dhabi, as well as CIC, they've made just $6 billion in total on their investments in the financials that they've invested in. Citigroup and Barclays are two that Barclays didn't turn to government help, but they turned to the private sector, or in this case, the sovereign sector. Again, keep in mind, the way I look at the sovereign wealth funds, they're sovereign.
So you think the phones will be ringing more, perhaps, as a result of some of the regulation, but you don't necessarily think that some of the sovereign wealth funds are going to step in and pick up that slack?
Yes, I think
they're going to be choosier about investments.
They're going to be definitely
post-crisis.
They're definitely going to be choosier. They're going to be much more strategic about their investments than they have been. I think they've gone through phases. The initial phase was much more of, let's earn the best return we think we can on our money. And now they're definitely focusing internally on their own domestic economies. And where they're investing outside of their domestic economies, they're looking to get a strategic return on that capital, not just a financial return. The global sovereign wealth funds, not just the MENA sovereign wealth funds, but the Asian sovereign wealth funds, will definitely be a source of liquidity for the world, and that's a good thing. We shouldn't be putting up gates around that, as some have suggested, whether it was Dubai initially with the Dubai ports deal from a few years ago. We should be encouraging that.
Well, it changed when people needed the capital during the crisis. All of a sudden, protectionism became an afterthought.
Absolutely. I mean, I shudder to think where our own industry, where the financial industry would have been without the sovereign wealth funds. I mean, at one point, Merrill Lynch had almost 25% of its investor base by sovereign wealth funds. Temasek owned almost 15% of us, and KIC and KIA each owned 5%. So I think the outcome of Merrill Lynch might have been different.